The 2008 financial crisis was a global economic collapse triggered by the housing market and complex banking risks. At the heart of the crisis were subprime mortgages, which were loans given to borrowers with lower credit scores. The downturn caused massive unemployment and a deep recession that impacted millions of families globally. A mix of easy lending, falling home prices, and risky financial bets led to the collapse of major institutions. Unlike a normal market cycle, the 2008 crisis saw the very plumbing of the global financial system stop functioning. As shown by home price trends, the rapid decline in property values erased trillions of dollars in household wealth. The biggest lesson for investors is that understanding risk is just as important as chasing potential growth. Thanks for watching. Understanding history helps us make better decisions today. Please subscribe for more finance basics.